Hello, this is your host, Tim Randall, and I'd like to welcome you to another episode of the REIClub interviews. As many of you know, REIClub.com is a great online resource with tons of free info and tools for real estate investors. Please check out the website at your convenience and get signed up for our newsletter so you can stay informed on monthly webinars, monthly website updates, and interviews we do with national experts. If you don't already have it in hand, please grab some pen and paper so you can take some notes. We've got some great information for you today. As always, the views shared by the speakers are the views of the speakers and do not represent legal or financial advice, so please seek your own counsel. I'm very excited today because I have Cherif Medawar, one of the nation's top experts on commercial real estate. Cherif, are you with us?
Yes, I am. How are you, Tim?
I'm good. Very good. Glad to have you with us today.
Thank you.
Want to share a little bit about your bio, and then I'll let you fill in the holes if you don't mind.
All right.
Cherif started off shortly after graduating from school as a hotel manager in L.A., and he has a very good story for how things changed for him, which I will leave to him to tell. But let's just let you know that he's been doing a commercial real estate for over 20 years now. He's done tons of different types of commercial real estate in many different markets. And for the past 11 years, he's been educating and coaching business people and investors on how to do what he's learned to do. He has a very large portfolio of commercial properties in the Caribbean, and he's one of the nation's largest holders of commercial historic properties. So I know that's a quick gloss over of the last 20 years, but Cherif, if you wouldn't mind kind of filling the holes for us, please.
Yes, sir. Well, actually, funny enough, when I was working as a hotel management trainee at the Century Plaza Hotel in Los Angeles, it was January 17, 1981. I was walking through the lobby, and a hotel guest, a very wealthy man in the name of Edmond Bissari, a billionaire, stopped me and asked me how come I was working so hard. He said, Cherif, why are you working so hard? Every time I come to the hotel, you're here from 6 a.m. to 11 midnight. And I said, well, sir, I want to become a general manager, so I'm working around the clock here. I'm trying to learn everything. He said, you know what? You will never make it big working for a corporation. You'll always have to pay a lot of taxes. You'll never be able to take vacation the way you want. Why don't you come and work for me? I have commercial properties around the world. Well, I must tell you, I got scared at first, but then I got excited. I went, worked for the man, worked for him from 1981 to 1988. I learned so much. I've seen deals being done all around the world. I was done deals for him in San Francisco, in Paris, in the Loire Valley, outside Paris. I've done deals in New York, and I got exposed to so much. Then I realized the big money is all in commercial. That's what he's focused on, and I realized I could do it on my own. So I left him. I asked him if it was okay to leave him, and I left him January 1989, started buying my own properties, and just really, really got big into commercial real estate. It's a lot of fun and extremely profitable.
Okay. Well, for those that have their own ideas, can you kind of share us your definitions of what commercial real estate is?
Well, commercial real estate is, you can start with apartment buildings, which is, over 25 units, so it'd be good commercial size, mobile homes, storage facilities, hotels and motels, retail shopping centers, senior housing, medical buildings. All this is considered commercial properties. Usually we define commercial properties as a property where no one will sleep in it, but I'd like to also add the apartment buildings in there because one deal can change your life. The more you focus on commercial and understand the difference and similarities between these type of properties, the better you become as an investor. And you probably would ask me, why would I want to focus on commercial and not residential? I got to tell you, residential is wonderful, but residential is cyclical. It goes up, it goes down. You see the market right now is down. You will have to always know where the market is, buy below market, and then flip the property to make money. The problem is buying and selling like this, you pay a lot of taxes because what happens is when you're selling a property back to back, you're considered a dealer, so you actually get taxed about 35% federal taxes as ordinary gain. And if you're in a state like California, maybe another 10% state taxes. A lot of taxes are for those that are buying and selling. But when it comes to commercial, you can literally take a property, even if it's vacant, take a single-tenant building, which is the standalone building, empty building, which you can find many right now nationwide. And you can actually negotiate negotiate with the seller to put it under contract. You have a period of time, which is the due diligence period. It's a period during which you can inspect the property and you have no obligation to purchase. For commercial properties, the due diligence period is longer than for residential homes. It could be about 45 days. So you put it under contract, you get 45 days to access the property, inspect it, etc. You learn how to start contacting tenants. You call Subway, you call Haagen-Dazs ice cream company, you call Radio Shack, these big tenants that are corporate companies, and you tell them, I have a space at this location, would you be interested to lease it? Well, the beauty about the internet is you can contact any of these companies by Googling, let's say, Radio Shack or Subway, finding their corporate office. You call them. You ask for the leasing department. You ask them if they're interested in that location, and that leasing department individual, which is usually an exclusive broker working for Subway or for Radio Shack, etc., they can actually look on Google Earth, find the location, look at the traffic, do all what they need to do right there with you on the phone, and will tell you if they're interested or not. And if they're interested, they send you a letter of intent, which says that they want to lease the space. They're going to come in. They usually send somebody to take a look, but they take it as is. It's not like residential, I have to fix it to rent it. These guys take it as is. They want to put their sign, their flooring, their counter, their lighting. Everything is up to standards of Subway, for instance. So number one, they take it as is. Number two, they want to take it long term. They don't want to sign a lease for 6 months or a year like residential. They want a 10-year lease. Number three, they will give you escalations. That means every year it's going to escalate. The lease, let's say they're going to pay you, $5,000 a month. They're going to escalate every year by 3%. That means there'll be an increase by 3% per year to meet or beat inflation. It's just built in. Moreover, they actually give you a corporate guarantee. Corporate guarantee is they guarantee that the payment will be made for the lease for the duration of the 120 months, the 10 years, by the entire corporation of Subway or Haagen-Dazs or Radio Shack or whatever the company is. So the entire corporation, which is worth hundreds of millions of dollars, guarantees your lease. Talk about safety factor and guarantees. And then also on top of the corporate guarantee, which is number 4, number 5, they lease the space on a triple net basis. Triple net basis meaning they pay you the lease, net of taxes, net of insurance, net of maintenance. That means on top of the lease payment that they're paying you the property taxes, paying you property insurance, and they take care of the maintenance. This is hassle-free, turnkey way to become very wealthy. Would you agree, Tim?
Absolutely. That's
And the fun part is they go in. Now the value of your building went up. You can literally keep that building or go refinance it or get a credit line on it. Right now the lending is very tight. But I got to tell you, you wait a few years, as the rental income increases, the value of the building increases, because the value of any commercial building is strictly related to the income it produces. It's not based on comparable sales. It's based on the income it produces. That's the power of why people can get into commercial real estate. You can do the work once, and then the property is on automatic, producing years of future streams of income.
Okay. Let me back up a little bit. So during the 45-day due diligence, you typically are trying to get your letter of intent. And how often do you have success doing it in that time period?
Well, I've done it for many years, so I'm pretty successful at it. I know exactly how to reach these tenants. I know what to tell them. I know what size spaces they've gone. I actually compiled the list for my own work, and I even had a company work with me for a full year, combined the list of 4,500 national tenants that are accredited tenants that have the money, that want to grow. And it's so I tell you, I have a 60% chance to get them in. I just know also what locations to choose that have the high traffic and who to call for what. But let's say a novice would start, even if they have a 25% chance. So on every 4 phone calls, they get somebody interested. Say even the chances are 10%. Okay, go ahead and make the 10 calls. All you need is one tenant. So, and as you make calls, you get better at the game. You get better at answering their questions. You get better at telling them what you got, etc., and it becomes routine. So it's a success ratio, yeah.
Okay. And if you weren't successful, would you walk away and just find another deal, or would you go ahead and take it?
Very good point. Well said, Tim. So now let's say you've called 100 tenants, and you're leaving voicemails, nobody's calling you back, they tell you we're not interested, we're not growing right now, we don't have a location there, we're not interested, we don't have franchisees, whatever. Well, you're under no obligation to buy the property. You can literally call the seller and say, look, I've done my due diligence. I'm not able to use the building the way I want it. I want to thank you. And be fair to them. If you see it's not working the first 20 days, don't drag them for the 45 days. Just, release some of the obligation of the contract and move on with life.
Okay.
So that's the idea, yes. And also, let's say somebody tells you we're interested and we are going to send you a letter of intent. Okay, now you can actually literally take that letter of intent with the preliminary contract they're sending you with all the terms and go to the bank and say, look, my credit may not be the best, but how would you like a credit that comes in from a tenant like Subway, where they have a corporate guarantee over $1 billion? Now, the bank wants, who is going to be making the payment, really? The tenant. So now the bank is able to work with you and the deed can be consummated very easily.
Okay, so that's... Okay, so that's where you just kind of you use the letter of intent to bolster your financial situation in order to get the loan.
Exactly. For somebody starting, that's the best way for them to start. And if the bank still insists on their own credit now, they can actually literally advertise and say, looking for an investor with good credit to come in and team with me for a long-term Subway lease. We'll share 30% of the upside or 30% ownership or 50-50. Let's go in. And the other investor will come in. The deal is pre-cooked. It's ready to go. Heck, I've had, opportunities where I saw people got in together. They met. They signed an agreement. They set up an LLC, and they did it because one guy was the bird dogger. He found the deal. He found the tenant, got everything together, and teamed up with an investor just through a conversation. He said, I got everything ready to go. The investor says, well, here's the risk. There's no risk. That's the idea.
Okay. And so for someone who's got limited financial resources, they would advertise for this other investor because they would come up with a down payment and they would give up a percentage of the upside in order to bring that person in?
Very true. And for somebody with little means, the hardest part will be how can I actually lock in that commercial property when I see that commercial property vacant? How can I put it under contract without giving them earnest money deposit? That's the hardest part. But you can actually also do what's called a letter of intent to buy. Not only is there a letter of intent to lease where the tenant sends you the letter of intent saying we would like to lease, but you can draft a letter of intent to purchase and tell them, the money's coming soon, but let me just get access to the building. I want to show it to my partners, etc. And because the market is so slow right now, a lot of brokers, a lot of owners say, okay, I'll give you access if you get contacts. If you can make the deal happen, I'll give you access. Let's make it happen. And this is happening even in San Diego, in San Francisco, in Oklahoma, in Miami. It happens all over. An owner of a building who wants to sell it will cooperate with any serious, active potential investor, even if they are not showing money right away.
Okay. So can you kind of discuss the money situation a little bit and clarify that, how that would work?
Sure. I want to talk about a lot of ways to start with no money. Finding good deals and finding properties that are selling below market value is not so difficult in today's market. There are websites like loopnet.com, LOOPNET.com. This website is almost like the MLS of the commercial real estate. It's like the multiple listing services of commercial real estate. You can search for properties by zip code, by state, by county, by city, by type of commercial property. And then so try to find something near where you live. You go out there, you look at the properties, you see what other tenants are in the area, talk to the seller and tell them you're a serious investor, but you want to first take a look at the property. And then when you see the property, understand the size, get some information, without even putting it under contract, you can start checking what kind of tenants will go in there. A fast food chain, an electronic company. You start Googling their names, talking to the leasing department, asking them if they're interested. Once you get somebody interested and they want to send you a letter of intent, that's when you can advertise even on Craigslist, looking for investors to team up with me for a long-term lease with Subway, long-term lease with on a single-tenant building for Radio Shack. And people respond. Investors are looking for good deals. An ad on Craigslist costs you nothing. And that's how somebody can start. team up with somebody with credit because they put the pieces together. I've done deals where no money down, whereby I actually leased the building. I leased the property. I have a lot of commercial properties in the Caribbean, as you know, Tim. And I remember I wanted to buy that building. This guy put for lease on the building. So I called the owner. I said, listen, I got money. I got everything. I'd like to buy it. And the owner said, I don't want to sell it. I just want to lease it. I said, well, how much? He said, $8,000 a month. It was a beautiful space, right where the cruise ships arrive, a lot of traffic from cruise ship passengers. So I know I own the building 2 doors down, and I'm renting it to Tommy Hilfiger Company for $20,000 a month. I said, this guy want to lease at $8,000 a month. He doesn't know what the market is. So I leased it from him. I said, okay, I'm coming over. I'll lease it. I wrote a letter of intent to lease, signed the contract, went on the phone, and I started calling the big tenants, calling companies one after another. 2 days of phone calls and voicemail messages. I got a call back from a company called Burberry, and I subleased it to Burberry for $20,000 a month for 15 years. I've been making the last 3 years. I still have 12 more years on that lease. They are paying me $20,000 a month. I'm paying the landlord, the owner, $8,000, making $12,000 a month for the next 13 more years. I'll be making that. That was literally a no money down. As a matter of fact, Burberry gave me the deposit and the first month, which was $20,000 and $20,000, $40,000, and I gave the owners of the building $8,000 down, which is the deposit, and $8,000 first month. I mean, from the get-go, I made $24,000, and everybody's happy. The landlord is happy. I'm leasing, but you have a clause there. You have a paragraph. They say I have the right to sublease. Just a very powerful way to make money with no money. It's called the sandwich lease as well. Is that a good one?
Yeah, that's good stuff.
Yeah, that's one of my favorite deeds. I mean, you just figure out the numbers, you know. And one of the best ways to raise money right now is the concept called syndication. 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 The concept of syndication is really simply defining syndication is group investing. Is when you group investors together for the purpose of purchasing a building. When you talk to people right now, you tell them, hey, would you like to own a small home for $50,000 somewhere in the Midwest and have some cash flow? Or would you like to own a Burger King or a McDonald's or something of that sort? Well, everybody would say, I'd rather have a Burger King. It's going to be a long-term lease, corporate guarantee, with escalations, triple net. I don't have to deal with anything. I love it. How can I get in? I only have $50,000. So, well, we're going to do a syndication. We're going to draft a document explaining exactly how we're going to buy that Burger King for $1 million, and we're going to raise $300,000, and we're going to get 6 investors or 12 investors together at $25,000 each or at $50,000 each, whichever, and we're going to get that money. We're going to put it in escrow. We're going to get the bank to give us the loan because it's going to be a big down payment. The bank has lower risk, and we're going to buy the Burger King, and everybody's going to share the upside and the cash flow. And that's how the big money's going to be made in the next few years here. And syndication is a very powerful concept, very little known by a lot of brokers and investors. And I have specialized in this for years now. And as the market tumbled in 2008, 9, and 10, I mean, I'm on the cutting edge right now. I literally find the deals, put them under contract, get a limited liability company drafted with an operating agreement, a little business plan of what the goal is going to be, and I give it to an attorney, an SEC attorney. These are all over the country. And I tell the SEC attorney, here's the business plan, here's the property, draft the document for me to present it to the Security and Exchange Commission. Because it's a security. When you raise money to invest for others, it's a security. So you got to have a document called the PPM, Private Placement Memorandum. The Private Placement Memorandum spells out in details what you put in the business plan, and it tells the investors, this is the property, this is what you need to invest, this is how your money will be invested, this is how much you're going to get paid cash flow, this is how many years you're going to stay in the deal, and this is how much we expect to make on the upside when we sell it, and that's how we're going to share the profits with you. The syndicator does not have to be licensed, does not have to have a lot of experience. All they got to have is the know-how to put the deal together and then to write the business plan for the attorney to get them the PPM, the private placement memorandum, so they can start showing it to people that are serious about investing and getting into the game. Now, what does the syndicator, that person that starts with nothing, what does he or she make when they raise the money and get the deal? Well, they get three big chunks of profit. First one is called the acquisition fee. So let's say you raise $1 million to do the deal. Well, you get 3% acquisition fee. You get $30,000 as soon as you close the deal. Then number two, now you close the deal, you're managing the asset for the group. Now, you get what's called cash flow. The property is making cash flow of $10,000 a month. The investors will get $8,000, and you keep $2,000. That's an 80-20. So you got an acquisition fee when you started the deal. From the money you raised and you close the deal, there is money coming for you. Cash flow from the deal, you pay them 80%, you keep 20%. 4 or 5 years later, if that's the time frame that you have decided to keep it for, and that's what you announced for investors. So 5 years later, with the escalations, the property has increased in value. You turn around and sell it. You make a profit. Let's say you make $100,000 profit. You share with the investors. They get 70%. You get 30%. You can even give them 50% and keep 50%. So there is an acquisition fee, a cash flow fee, and a disposition fee. I do these $10 million at a time, $5 million at a time. I put a $10 million deal. We go find a good shopping mall. I tell the investors about it. Investors go in with $25,000, $50,000. When we close the deal, I get a 3% acquisition fee, which is $300,000. Property makes $100,000 a month. I get $20,000 a month. Investors get $80,000 a month. I'm doing all the work. I have a management company that handles it and that manages the shopping mall, all because of the income of the shopping mall. And then the disposition fee, we sell it a few years later at $14 million, at $15 million. Guess what? I walk away with $1 million, $1.5 million as well on the back end. Extremely profitable for everybody involved. The banks are happy because the bigger down payments are able to finance. The sellers are happy because they're not waiting for one guy to come in and put a big down payment. They see that it's syndicated. There's a lot of bunch of little people coming in together, so they're able to buy and everybody benefits. The mall is happy. They're continuing to grow. I mean, those people are still listing properties, brokers listing properties, trying to hope for one big buyer to come in and put a down payment. They're not going to make it. Unless they know syndication. There's just no way to make it in commercial real estate in the future when the market is so dry with banking. So hopefully that clarifies that a little bit.
Yeah, that's very good information. So let me ask, so what are some of the disadvantages or risk related to syndication?
The disadvantages are the fact that you may not find every investor you talk to interested in syndicating because as you talk to investors, maybe the investor will tell you, you know what, I don't want to give the money and wait 5 years. Or I don't want to give you the money and be not in control. So, because when the investors give you the money, you're managing the money. You take the money, you put it in that deal that you told them it's going to be, and they cannot liquidate until you liquidate the deal 5 years later, etc. So that's the downside. Well, the good side is, or the upside is, a lot of doctors, a lot of engineers, a lot of attorneys are too busy to go and get into real estate and make money. So they want something safe. So the safety factor is huge when you get into a big tenant with corporate guarantee. They could not do it on their own, but they can do it as a group. They like the fact that it's hassle-free. They can focus on the profession. They like the fact that somebody else is handling it and that all the documents, the PPM and everything is filed with the SEC, so it protects everyone. So there is the bad, there is the good, but you just choose your investors. And if you're cautious enough, if you know what you're doing and you choose a good tenant in a good property in a good location, the downside is practically nil. Nil, and it's very little risk.
Okay, and so your recommendation, or I guess the safety factor would indicate that you typically would do single tenants?
I prefer for somebody starting into this to start with single tenant buildings or shopping malls that are triple net. If they want to do storage facilities or mobile homes, to make sure they have a very strong management company experienced and local to manage the product for them and to figure that with the numbers. So when you say the cash flow is X, that's after the management fee. And you as a syndicator will be managing the management company, which is called asset management. A friend of mine did a syndication. He lives in California, and he syndicated a property, an apartment building in Dallas. Every investor he talked to asked him, "Hey, Roger, how are you going to be syndicating the property when it's all the way in Texas and you live in California?" He said, "I have a local management company, and I manage the asset, and here is how I do it. Here are the numbers. Here's the deal. It's a very good deal. The cash flow is X." And he raised a lot of money that way. And he's making a huge cash flow every month. He's making over $30,000 a month, literally hands off, through the management company. He knows how to manage the numbers, and he's very well trained, and he's an experienced person. And in a few years, when he sells the building, he should be clearing over $1.5 million for himself. And he would make his investors a lot of money. An average rate of return of over 12% per year for these people going in with him.
Okay. So, not to be a negative person, but what, in the current market, what happens if the disposition, or I guess the resale price, doesn't fetch what you had originally anticipated?
Excellent. And no worries, you can challenge what I say any way you like, Tim, no problem. I'd love to be challenged. Well, let's say you raise the money from a group of people, and you told them, all right, we're going to go into this, let's say, hotel, and we're going to buy it for $10 million, and I'm raising $4 million, and people put in big chunks of cash, $250,000, $150,000, whatever, and then you put $4 million down with the group money, and the bank gave you $6 million, and you told them in the private placement memorandum, we intend to sell in 5 years. Well, 5 years later is 2016, and you're trying to sell now, and next thing you know, market is not helping you. That local area has low occupancy for the hotel and low average daily rate. Well, you can just tell the investors, although the plan wants to sell in 5 years, we would like to wait a few more months because we feel that if we ride it the next year, we'll be able to liquidate the fund and sell the actual, we'll be able to sell the building, the hotel, and liquidate the fund at a much better price. So we're not promising anything. We're not guaranteeing anything. That's a big concern for the SEC. We're just saying, here is what we intend to do. We'll do it in good faith. We will have a fiduciary responsibility to run everything and monitor and supervise everything. But if the market doesn't help us, we will also make sure that we adjust to it and inform you and update you so we get you the best profits. And since we profit from what they profit, they know that we're all in the same boat. And it does happen. So the idea is do the best due diligence coming in, understand the trend and the market, and make your money buying. Not just taking it to another upside, but just compound your return by buying it the right way, operating it by taking it to what I call highest and best use, and then sell it at the best possible timing. Because the reverse can happen. You may say it's going to be 5 years, and 3 years later, you've done so many changes to the building that it improved so much in value that you have a perfect point to sell, and you then inform the investors, I told you we may wait for 5 years, but the opportunity is now. We got an offer. It's been in it 3 years. Let's go ahead and cash out and make out like bandits. So that's the idea. Did I cover that question?
Yes, you did. Very good.
So let me mention. Go ahead.
No, go ahead.
Let me mention what I mean by highest and best use. Now, when you look at a commercial property, really, everybody could see a yellow building with so many units to rent, or a green building with a shopping, little shopping mall downstairs and upstairs condos, mixed use or whatever. But the idea is to see beyond that. The idea is to see what is the highest and best use of that property. Should I build a second floor? Should I split the space? Should I actually take the garage in the back and use it for something else? Should I put signage on the side? Should I put antennas on the building? Because anything I can do that brings more income would be taken into its highest and best use. And that's where the money is. If I tell you right now, Tim, let's you and I team up, do a little joint venture, and let's buy the building across the street. And Tim, you tell me, all right, Cherif, let's go ahead and get this building appraised. Well, the appraisal will come in, and the appraisal will show three things. It will show the income appraisal, which, okay, based on the income, the value is X. It's going to show, number two, the cost of what you call replacement cost. So the cost of building another one similar. So replacement cost is X. And the third one will be comparable sales. What sells in the area similar to this one? What have sold recently? So you got the income approach, the replacement cost, and the comparable sales. Those are the three approaches that will appear on the appraisal report. And the appraiser really does not put for you what you really need, which is your creativity, which is the highest and best use of the building. Imagine you're looking at this appraisal, and the appraisal comes up $1 million. But you and I stand in front of the building and we say, you know what, Tim? I can put antennas on the roof because it's right next to the freeway, and we can get these cell phone companies to put the antennas because the building is pretty high and can shoot the signal. They'll pay us $2,000 a month for three big antennas like those building right next door. We'll be making extra $6,000 a month, and then we're going to put a soda machine on the side. And that side of the building, we have approved it by the city's planning and zoning department, put an advertisement, a big billboard on the side that will pay us an extra $4,000 a month. Next thing you know, the building was supposed to make $10,000 a month, but we're going to make an extra $10,000 between the antennas, the signage, the Coke machine, the laundromats in the back, and something else in the parking lot, and all this stuff. Next thing you know, the building is valued double. But that didn't show up in the appraisal report. They don't show you highest and best use. This is only for those that are trained, those that are experienced, those that understand the game and can play to its highest level.
Okay. So I'm not sure in your particular area. I know that I'm in the Austin, Texas area. And I know that we're seeing more and more, what I call see-throughs. So does that alter? How does that alter one's game plan if you're seeing more and more commercial properties that are for lease and for sale?
Well, the way it alters it is you don't want to go in, like I can tell you, like in Phoenix, Arizona. It's very hard to go and make a good deal for a tenant. Because if you're driving, or Las Vegas, Nevada, outside Las Vegas, I mean, these areas, I've seen people take people in a tour and just show them the areas there. I mean, these areas are, excuse the expression, sucking wind. I mean, literally, you drive 2 miles and all you see is for lease, for sale, for lease, for sale. I mean, storage facility, another place boarded up. You can't even tell what it was, a shopping center shut down. You don't want to go to this place right in the middle of nowhere and try to bring a tenant. Even though there could be highest and best use for that, you're competing with a lot of other properties that will probably lease for nothing. So you want an area where you have maybe a downtown, where something is happening next door, another thing over here, and there is that little building that's empty. They just lost the tenant, and they don't know how to get another tenant. They're not experienced. They're not motivated. They inherited it or whatever, or it's a broker listing many properties, overwhelmed. You want the opportunity in the middle of something else happening. It seems like in residential. You don't want to go out in no man's land to buy property for pennies on the dollar because you won't be able to rent it, lease it, sell it. Even if you fix it, I mean, it's just, there's no market there. You want traffic. The key thing is traffic. You want busy traffic, and you want it next to something that makes sense, next to a university, next to a hospital, next to a big hotel, next to the airport. And there are some activities going on, and you start thinking creatively. I remember this guy had a land in Santa Clara, California, and he said to me, Cherif, my land, I tried to sell it for $600,000. I thought it was the hottest thing because across the street there is Sun Microsystem, the biggest high-tech company. They have a training center. It's huge. But there is a railroad track right in front. And I tried to sell it $600,000. It didn't sell. I dropped it to $400,000. It didn't sell. He said, Cherif, take it from me at $200,000, man. Just got me out. I told him, you know what, that land, why don't you just develop it? He said, well, I can get a loan. They told me they can loan me, but if I put retailers, there's no activity there for retailers. If I put mobile homes, it's too noisy. They're not going to live there. It's just too much. Well, I told him about storage facility. And guess what? He went and found the developer. The bank gave him the loan, and they put storage facility. He thought it's a bad piece of property because it's a bad land out in nowhere, across the street from Sun Microsystem, where it was going to be just coming from Sun Microsystem, but Sun Microsystem was not doing so well, or just coming down. They were laying people off a few years ago, etc. But storage facility, you don't need the best location. You don't need it quiet. You could be next to the airport, next to the railroad station. Storage facility. Built it very inexpensively. It's leased almost 80% all the time. He's making $16,000 a month, and he just put electronic system there where you can actually literally slide the credit card through, access your building. So he's got a mom and pop people running it. It's a cash cow for him. I mean, from $200,000 he was going to dump it to thinking a bit more creatively. But again, you got to be very careful. Location, 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 even for commercial and in today's market.
Okay, so that's good stuff. Let me ask, how would you go about, if you can step back to when you were newer, how would you go about finding, what are some of your favorite ways to find good deals, and how would you know when you saw it?
Very good. How you find good deals is literally by type of property. I specialize, for example, if it's a retail, let's talk about retail for a second. I want to go somewhere where there is a lot of foot traffic. So for retail, I went to the Caribbean, right where the cruise ships arrive. People get off the cruise ship, thousands of people every day, different people, and they walk. I mean, obviously, that's the place for retailers. For mobile homes, I want the place where it's warmer, where people want to retire. I want the land. I want to be able to have a city planning and zoning that's flexible enough, willing to work with me so we can subdivide. I want to find a place to get the mobile homes inexpensively shipped and placed right there so I can sell them easy terms, so I create from something even better. Instead of selling it all cash, selling it easy terms. Apartment buildings I want to be right next to where there's a lot of activities, a lot of employment, big companies, steady, solid companies. I want to be right, if it's a hotel, motel, I want to be next to the airport. I want to be next to the university. There's activities, stuff happening there. Senior housing. I want to be in a warmer place. I want to be in Texas. I want to be in Florida. I want to be, believe it or not, Colorado is also pretty good for senior housing. Medical facilities, you can do them all over the place right now, pretty nice stuff. So I choose the location really by type of commercial property I want to focus on. Based on the trends right now, you can focus on medical buildings, you can focus on senior facilities. A lot of pharmacies are growing if you want to focus retail, single-tenant pharmacies, CVS, Walgreens. Apartment buildings, got to be very careful. Apartment buildings are not easy. A lot of people want to get into apartment buildings. They think, I'll have so many units, they're going to pay me so much. That is one of the toughest commercial real estate you can ever get into. And it involves a lot of collection, involves a lot of headaches. So if you are not really ready to calculate the numbers with a management company, you better start with maybe a fourplex first to test the ground and see how you work with these residential. It's a lot easier to get a commercial retail or even a mobile home where they own it, so that they have more interest in making the payments so they don't lose what they own than just get into an apartment building because it's a good deal and, I'm a genius. I'm going to take the bad people out, put good people in. It's not so easy. You've got to know what you're doing with apartment building.
Okay.
And you said if I go back and start all over again, I probably, I probably would start by grouping people together from the get-go. I mean, I would have, if I knew then what I know now from the start that I was so young. I left the billionaire, I was 28. So I left him. I had a lot of experience and very little knowledge, but my experience was to invest by myself. Once I started investing by myself, I realized the most successful way to invest is to find the business models that work and invest into these business models. And then I realized, oh my gosh, I can create my own business models and have people invest with me. So if I really have to do it all over again, I'll create my own business models from the start, which are the syndications. I'll tell people, hey, listen, we're going to get this apartment building. It's 200 units. We're going to all buy it together. I have it. I understand it. I put it together. Here it is. Here is the business plan. Here's the private placement memorandum drafted. Give me the money. Let's go in. And I'll do it following the law, exactly the way the SEC wants it done. And it's not so difficult. It's very doable by anybody that understands the game. And it's a game because it's a lot of fun. Everybody benefits. It's a game where nobody loses. There are no opponents. And that's how I would have started. because the end goal is simplicity. So if you start with simplicity and giving people a piece of the pie and everybody gets a little piece, everybody's happy, satisfied, and they appreciate what you've done for them.
Okay, so what, as a syndicator, does the syndicator have any risk?
The syndicator really have very limited risk, provided they disclose everything they know and they work with the fiduciary responsibility for the group, no conflict of interest, disclose everything you know, and work hard, work smart. You will make them and yourself a lot of money. The risk is mitigated and very low because you disclose everything and you act in good faith. And everybody's risk is also mitigated and very low because the risk is spread, and you choose the right properties with a strong tenant, and if you do it the right way, your risk and their risk is very low.
Okay. So based on what you're saying, the success ratio, if you make good decisions and you disclose and work hard, is pretty high.
Very high. Yeah, it's higher than doing it on your own or trying to go conquer the world because you think you're a genius, etc. No man is an island and no woman is an island either. And if people team up together, they realize it's a lot easier to cooperate than to compete. A lot easier. And you cooperate, you eat the competition. Then people realize they either cooperate with you or they'll be eaten alive. They'll get out of your way. Then you can take regions and areas and say, okay, this whole area is down. We're going to be able to take one at a time and tackle the problem. And the whole community can team up together, and then you bring in life back into it. But then I don't want to be an idealist. I want to be a good investor for those that trust me and invest with me, etc., and those that will trust you and invest with you, etc., as an investor for the listeners,
Okay. Is there a step between...
The step between is to really learn. I mean, I think what you do with your company, Tim, is phenomenal. I mean, these CDs you do and the education, I'm trying to give it my all because I want people to learn. I think what you do is phenomenal. The more people are educated, the better off they are. I remember this guy telling me one time, he said, Cherif, I don't want to go learn in a classroom or on a CD or a DVD or internet. I just want to go do it. I said, well, sir, the best way to do it is to learn first the theory, and then you go do the practice. Because if you just do the practice, you'll have a single point of view. If you learn the theory first, you will learn several viewpoints, and when you go practice it, you will learn your point of view in comparison to the other viewpoints. And you will not have a tunnel vision, you'll have a funnel vision, and you'll be able to actually improve the game as you go along and not repeat your mistakes or actually just stay in the status quo for many years. You see my point on that?
Yeah, that's good.
I mean, I've seen people, they say I have 20 years experience, but it's 1 year repeated 19 more times, right? You have to keep evolving the game, adjusting. So when the market changes like it just changed recently, you don't wait for it to change back. You change quicker than the market, adjust, and get the syndication going. Banks don't have money, but the prices are low. Great, let's raise the money, and we go buy them for pennies on the dollar. And then the bank will come in and say, okay, I'll give you a credit line. That's the way to do it. Is you don't wait for the market to change, you change.
What are some ways that you would go about finding investors once you had a property locked up?
The best way is get a good business plan. A good business plan involves 5 things, if I may take a moment on that. Good business plan involves the 5 P's. The people, the product or the project or the property. You see, that's the second P, it's the property. The positioning, which is, why is it such a hot property? Why is that property so unique? What is it about that market? What's the positioning it's going to have? And then the performance, you got to be able to tell them, here's how we're going to perform. Here's what we're going to do. Here's how we're going to do it. Here's how long it's going to take. And then the final P is the profit. So people, property, positioning, performance, and profit. That's how you write the business plan. I can't believe it. On the internet, I've seen people selling business plan templates, $600. The whole thing is the 5 Ps. I mean, that's the whole idea. So you put the people. The syndicator is going to be me and my friend or my partner. And the people we're after is the investors that want to do this and that. And the tenants we're after under the people is going to be retirees, let's say. The property is going to be senior facility, senior home, and assisted living facility. The positioning, this is going to be a neat facility because it's close to the hospital. It has a suite. It's not a room. It's a suite. It's larger. It has every unit has everything all included. It includes some other outsourced services such as haircuts, such as medical services, pharmacy downstairs, etc. Positioning, very strong performance. We intend to purchase the building, reposition it this way, doing it this, it's going to take so long, etc. And the profit, we expect to pay the investors 6% cash flow and upside of another so much when we sell it 5 years from now or when we refinance it, etc. So you go from people to property to positioning to performance and profit. You present that to the investors. Investors will say, I'm ready because you're serious. And that business plan will be attached to your private placement memorandum, and people will write checks. And you got to make sure you're talking to people with whom you have what's called existing and substantial relationship. That's what this SEC requires. There are many attorneys that will explain that, and people got to know what they're doing. But it's not so difficult. It's a matter of focus, matter of training, and then as you practice, you will elevate the game to a level you never dreamed possible.
Okay, so existing and substantial relationships, that's the actual terminology they use.
Exact terminology, existing and substantial relationships. So, Tim, let's say you and let's say I'm coming to solicit you for my syndication, right? What I will have to do is I'll have to qualify you. I'll say, Tim, I'm an investor that groups people together for commercial buildings. I run them safely with high returns on cash flow and upside. Totally hassle-free. I do the entire project from finding, analyzing, controlling, timing, and strategizing the deals, all the way to selling them at the end. And I'm looking for investors that want to make more money safely. Would you be interested?
Okay, so do they have to be accredited?
That's a very good point. Well, if you tell me, yes, I'm interested, I'm going to tell you, okay, I need to qualify you, Tim, because there are two types of investors that need to come in. There are the sophisticated investors and the accredited investors. Accredited investors, let me start with that one first. Accredited investors are people that have a net worth of $1 million. A combined net worth between your home, furniture, investment property, stocks, 401k, IRA, all you got together is $1 million net worth, you're accredited. If not, do you have income of $300,000 a year, husband and wife, or $200,000 a year by yourself if you're single? If yes, then you're also accredited. So either $1 million net worth or $300,000 or $200,000 cash flow. Now, if you're not accredited and you're still interested, you want to come into the fund, I may be taking sophisticated investors. Sophisticated investors are those that are trained, that can assess risk, that understand the risk-reward ratio in any business, understand businesses, etc., and that's how they work it. So if you're sophisticated, you can also get into the fund. You will just need to fill out one extra form called the purchaser representative. Have somebody say, yep, they know you're sophisticated, and they just sign that form, and then you can get into the fund by putting the minimum unit amount necessary. Let's say the minimum is $25,000 to get in. You write the check, then you're sophisticated. If you're accredited, it's just a simple two forms you fill out, and then you write the check, you're accredited, you're in, it's easier, it's faster. But either parties can go in. So to establish a relationship with you, I must qualify you, keep record what questions I asked you, that what you told me, and there is a form called the qualification questionnaire that you'd have to fill out before you join the fund, and fill out that other form called subscription agreement. Now, all these forms will be in the private placement memorandum. The attorney drafts the form, gives it to you, and it's like a little checklist. It's not so difficult. I mean, just the names may be new for some people, but it's the private placement memorandum. We'll have the business plan as well. We'll have a form called qualification questionnaire for the investors to fill out, and it has another attached form called subscription agreement that says, I, Tim Randall, hereby subscribe to Cherif Medawar Syndication. Sign it. And that's it. And then I tell you, okay, you know, Tim, you're sophisticated. I need you to fill out one more form called the purchaser representative. Just have your CPA or your financial advisor sign it so we know that they represent you. They know you better than me. And if I look at your qualification questionnaire and you have a net worth of over $1 million or cash flow, income, $300,000 or $200,000 based on married or single, I say, Tim, you qualify, sir. You're accredited. You don't need any other forms. You can start writing your check. Your income will start. We're going to pay you monthly or quarterly, let's say 6% per year, paid quarterly, and we're going to liquidate the fund in 5 years. We intend to sell it within 5 years for so much more. So when we divide the gains at the end plus all the cash flow, your average rate of return will be, let's say, 10%, 12%. hassle-free to you, and your money is secure and safe, and this private placement is filed with the SEC. They know who I am. They will know you. They will get to actually see it on record. Everybody's protected. The game is on.
Okay. So, if again, let me go back to, since a lot of our listeners are newbie type folks. Based on those qualifications, what would you suggest would be good ways for them to try to find investors for their deal?
The best way to start finding investors, go to investors clubs, go to gatherings, start advertising, saying that you group people together for investments. Whoever's interested, please contact me. You start qualifying the people. You put yourself in the forefront of information. You start looking who is selling properties. Go to auctions. Go to, when you go to church, network with people, people of same interest. Go to charity events. Get to know the people. Yacht club. Go to places where wealthy people go to places where investors go, and keep the word out. But also keep looking for deals. So when you find a good deal, you're able to talk intelligently on what you have, etc. Once you line up 4 or 5 investors, you can grow organically because they will bring you other investors. If they like what you do, they may even grow with you. They may even tell you, you know what, I want to give you more money. What else do you have? Or you can tell them, I have another deal. Would you be interested in investing again? The whole idea in anything is to start. Most people can get started. That's why they can build momentum. They can succeed.
Okay. Obviously, that's a very good point. So let me ask, and again, I'm just throwing questions out as they come to me. What would a package, what would it run to put together a package with the SEC attorney?
It can run you, the whole thing can run less than $20,000, $25,000. It depends how complicated your deal could be. And I got to tell you, one of the best deals I've seen is this guy found a great deal, did not have a penny. When started, he had been already talking to investors, so he called one of the investors. He said, okay, the time is now. I found the deal. Would you co-syndicate with me? That means you become a syndicator with me. And the investor said, I don't even understand what syndication is. I understand I give you the money, you do it. What do I have to do? He told him, we will do it together. We'll write the business plan. We'll go to the attorney, draft the PPM, and we're up and running, and we just got to follow certain rules, which will be explained in the PPM, and we'll talk to the attorney and get it set. The investor put the $25,000 for the PPM and setting up the limited liability company, and they went up and running, and they made a killing profit. And one of the partners, one of the syndicators had nothing, zero. I mean, the guy was laid off with no money even in the 401k. But he found the deal, took action, and asked the actual investor, would you co-syndicate? He did the deal. And, the investor said, why not? You do the work, I'll put the money and the credit. So, and often you don't even need the credit because the investors are coming in putting the down payment for you. So the credit is the group. The large down payments of over 40%, the bank is happy with the down payment. So the credit necessary would be the tenant's credit, whoever is occupying the building, etc.
Okay. So let me ask, what are some, if someone were going to get started in this, what are some tasks that you would recommend, if the key is getting started, what would you recommend that they get started doing on a daily basis that would help them get up and running?
Okay, there are 2 functions that people need to do to get going. Function number 1 is start deciding what type of commercial property I want to focus on. That's an important decision to make. Number 2, on the property, what are the deals that are out there regarding that type of property? Let's say you want to focus on storage facilities, right? Start then, okay, so that's the one. Why? All right, is it an easier sell? Do you think you can explain it better? All right, fine. Then start looking on websites for storage facilities. What are they selling for? What are the numbers? Start calling brokers, asking them questions. Get to know that product really well by asking questions, asking questions and getting responses and challenging them. Once you understand the product and what you want to do, start soliciting investors and make sure there is interest out there for that type of commercial property. So you're constantly trying to manage the property deal and investor interest and who you're going to solicit from. So today, like you hang up, you make a list of who would I call if I need to actually raise money. I'll call my cousin, I'll call my sister, I'll call my friend at work, I'll contact my neighbor, and if you come up with 10 names, Now start with the family members. Pitch to them. Present to them that the mobile home that you found or storage facility or apartment building. Have them poke holes in it and challenge you and see how you're going to present it better. Because the entire thing is ability to communicate. Because you're going to communicate with the brokers or the owners that want to sell the building, and you're going to communicate with the investors that want to invest to group them together. So really, looking for properties, deciding what type, searching for that, looking for the investor profile you're after, which is the accredited investor, the wealthy person, high income, busy professionals that would love to invest their money safely, and start talking to them. Would you be interested if I group you together with a bunch of other people to buy a commercial building safely that produces good cash flow? Yes. All right. I can put your name down. Yeah. How much would you commit to? 50,000. Okay. I'll get back to you. You know, and all of a sudden you got the game going, and you look at your list a couple of weeks later, and if you got some names and you got some interest, you're on the right track. And then you take every possible class that comes up on commercial properties, different commercial properties, take every possible training on how to raise money, how to communicate, and the rest is the legal paperwork. That's all you're trying to balance, is the legal paperwork and the business plan and all this. The paperwork is not so difficult because, you can do the basic idea and the attorney will draft the rest. The fun part and the challenging part is talking to the investors and getting the deals, and that's fun. If you're like people tell me I'm passionate about commercial real estate. I said, well, let's go out there, study commercial properties, tell me which one you like, and then let's talk to investors. Oh, I don't know if I can do that. I don't know, it's going to take time. Well, then you're not so passionate about it. Then maybe go do something else. Go get a full-time job or, And then they say, no, I like it. Okay. It's okay to be scared. If you're not scared, then you're not growing. Because if you're not scared, you're not going outside your comfort zone to grow, and if you're not going outside your comfort zone, you're not going to make the big money. That's the whole idea. Just be uncomfortable a bit, then you're going to become more comfortable. And when you raise money and do the first deal, even though it's a baby deal, 2 million or 1 million, well, then that's it. You've done the first one. The second one is 10 million. And you find that's the same thing to do a hotel, 50 million, than it is to do a storage facility, 5 million, and then a little apartment building for 500,000. But start somewhere and build momentum.
Okay, that's good. That's good information, Cherif.
Thanks, sir.
Are there certain key players you want on your investing team, or is this something you start out by yourself? Or
I would say you start by yourself in terms of start talking to people, and as you talk to people like brokers, when you talk to investors, when you talk to sellers, when you talk to attorneys and other people, and as you interview people, you will know who you want on your team. Some people get so hung up in the beginning about building the team and getting the business cards and all this that by the time they get the business cards and ask so many people about being part of their team, they already lost energy. Just get going with what's important. Let me find a property, let me solicit investors and start talking to them, see if there is interest out there, general interest, and if there is, let me see from the people I talk to, maybe who can I get as a partner co-syndicating with me. Maybe the seller of the building himself will tell you, you know what, I've been trying to sell the building for a year, I'm willing to discount to you if you move quickly, and he tell the guy, you know what, sir, I'm going to be upfront with you. I know how to put the deal together. I don't have all the cash, but I have investors lined up. Would you, the seller, co-syndicate with me? Let me explain to you how we can do this together. You will sell the building, but stay on the building with me as a syndicator when we sell it to the group of investors. We continue with the building with the cash flow, and then we sell it again 5 years later. So you get money now, you get money from the cash flow, and you get another disposition fee. The seller will not believe his ears. He's going to say, I'm going to sell it like 3 times. Yes, but if you know what you're doing and how you're doing it, you will create the team. The team will come to you. The vitality generates vitality, and knowledge seduces people. They want to get in. They love it, provided there is a huge safety factor, not just with what you say, but with the actual collateral, the building, the tenant paying, or the tenants that are there, the purchase price we got, the cash flow, the entire concept of the highest and best use, and why the upside is very doable. And maybe the upside will be done not by selling the building, but refinancing it, paying them all off, and keep the investment producing cash flow over and above all what they paid and had the return, in full return to them.
Okay. Very good stuff. I know we're coming up close to the hour here. Do you have any last minute thoughts you'd like to share with the listeners?
Well, the last minute thoughts is, the time is now to take action, but you got to take baby steps. Don't overwhelm yourself. People seem to want to study everything at the same time to choose, but the more they study, the more they get confused. Success will come from you knowing that you don't have to know it all to take the first step. There is a big difference between confidence and comfort. To be comfortable is you want to only deal with what you know, and that's no matter how much you know, that's not enough. To be confident is to know I'm going to step forward, and there is stuff that I'm not going to know. There will be problems and challenges, and I'm going to be confident enough to solve them. I'll find solutions as I move forward. And when you realize confidence is the game, you will move forward carefully, cautiously, and you will solve problems as you move forward, and you realize you're growing. So I hope people will have the faith in themselves and in God to move forward with confidence, and then confidence will come later. I want to thank you, Tim, for the opportunity to speak to you.
Well, I thank you. And also, Cherif, I know with all the fantastic information that you shared today, there will be folks who would like to get more information. Would you be willing to share your contact information with them?
Yes, I'd love to. My website is www.cmrei.com. CM, because my name is Cherif Medawar. I spell it with a C. So C like Charlie, okay? Cherif Medawar, Real Estate Investing. So CMREI.com. Love to hear from your listeners and your students. So thanks again, Tim, and I look forward to seeing you in person one of these days, okay?
All right, Cherif, thank you very much for taking the time out of your busy schedule. And I know the listeners got tons of information if they were able to take notes fast enough. For all the loyal listeners, thank you very much for joining us. We know your time is valuable, and we appreciate you spending it with us. So this is Tim with the REIClub signing off. Good investing to you all.
Thank you. Bye-bye.
Goodbye.
Wow, guys, thank you for that great interview. This is Ashley Jones, the CMREI Vice President. I won't keep you guys much longer, but for the REIClub interview listeners, Cherif has put together a fantastic package to get you started. So let's run through that right now today. First of all, he's put together this self-study program. It'll be easy for you to learn from home. And then obviously you can call into the office to ask any questions that are important. We want to get you guys up and running. Whether your business is real estate in residential or in commercial, obviously you want to be an expert in group investing and know how to raise this capital for yourself so you can do as many deals as you want without having to do traditional financing. Obviously, sometimes you want to do a little bit of both, but this package is going to teach you how to do that. Group investing is imperative, just like Cherif said. So what he's put together is a quick start learning program just for the REIClub listeners. It's going to consist of a DVD set that I'm going to send you. It's Cherif's 2-day DVD set of his most powerful commercial real estate training. You're going to get that sent to your home. Then you're going to get immediate access to the really important online training series that'll just keep giving you more and more information. It's so powerful. Obviously, the topic is syndication. It's going to start out with Cherif's 2-day syndication program. It's also going to give you the training materials you need. We're going to give you 3 months access to CMREI. You're going to see there's other online training things that Cherif has done over the past couple of months on different types of residential strategies, from REOs, discount notes, creating the note. It's going to talk about different rehab strategies. And of course, we're going to go into commercial real estate and the basics to all assets within commercial real estate. Then if you want to, dig in deeper, obviously we have more information on the site that'll give you hours and hours of information on individual asset types like apartments, mobile homes, storage facilities. But with this program, we're going to get you started out with the 2-day DVDs I'm sending to you, the real estate syndication 2-day course online. You'll get immediate access and then access to the site with all the resources, the training material, and everything you need. As a bonus, because Cherif talked about his REO business model and his foreclosure auction model that he is investing in right now, he's going to throw in those 1-day trainings on video, and you get immediate access to those also on the online training system. So what does this look like? Well, here's the package: the DVDs, the online immediate access, the extra bonuses of the residential strategies and REO and foreclosure models. And this is going to give you everything that you need. This is a a $2,300 value. We're going to be giving you the REI Club discount. We promised them we would. And here's what you're going to get. You're going to get all of that for $499. This is a great investment opportunity. You're going to have the information that you need to be an expert in group investing. It's going to give you all the tools that you need to really get started and change the game. You're saving over $1,800. So once you guys are ready to get this program, just give us a call at the office, 407-608-5448, or even easier, you can just look to the right of your screen. There's a little box and it's a purchase link you can purchase right from your computer. It's secure, it's safe, and it gives you instant access to everything that we're going to send you with your username and password. So if you have questions, give us a call at 407-608-5448, or if you're just ready to get it and get started, use the link on your screen and purchase right there. We're here to get you set up. We'll get your DVDs shipped out. We'll get you the immediate access that you need to the online series and get you guys started for pennies, $499 for a package that's well valued over $2,300. And I just think that this is a great start. So if you liked what you heard, if you liked what Cherif was saying on this interview with the REI Club, please take advantage of this now. Call in. We're here. Number again is 407-608-5448. This offer is going to last just for the REI listeners of this interview. We appreciate your support for helping, Cherif have a great audience on the other side, a lot of great questions to follow up with, and it was just a real fun time. So thanks again to REI Club. Thank you, Cherif, for a great interview and a ton of information. And thank you guys, our CMREI members, for always standing by us. So call in now, get this new self-starter kit that Cherif has set up. And again, that number is 407-608-5448. We'll get you the immediate online access with your username and password, and then I'll be shipping out your DVDs. All right? Talk to you guys soon. Call in now if the lines are busy. Leave a message or call in. I hear Zach's on the phone right now. So, all right, gotta go. Talk to you later. Thanks.